If you're relying on CPP, OAS, or GIS payments to get by in retirement, or you know someone who is, then July 9th, 2025, is a date you need to circle on your calendar. Because what's coming isn't just another routine deposit. It's one of the biggest pension updates of the year in Canada, and the changes to your retirement income might be more significant than you realize. Today's update affects how much you get, when you get it, and even whether you qualify at all, depending on your income and situation. So don't click away. In the next few minutes, we're breaking down everything you need to know in simple, clear terms. Let's get right into it. Starting with the Canada Pension Plan. As you probably know, CPP is the retirement pension that most Canadians pay into during their working years. Since 2019, the government has been gradually enhancing the CPP to increase retirement payouts over time. And now, in July 2025, we move into a new phase of that plan. The year's additional maximum pensionable earnings, what they call YAMPI, is kicking in more widely. That means higher earners who pay more into CPP can qualify for a second tier of benefits, essentially giving them more than the old maximum allowed. If you're still working and under 65, this matters. You're contributing more and earning more future benefit, but even current retirees aren't left out. July's adjustment includes an inflation-based increase to the base CPP amount as well. For new retirees in 2025, the maximum monthly CPP benefit at age 65 will rise to approximately $1,430. That's up from about $1,364 earlier, giving some recipients close to $800 more annually. Not a small sum when you're on a fixed income. Now let's talk about old age security. OAS isn't tied to work history like CPP. Instead, it depends on your age, legal status, and how long you've lived in Canada after turning 18. Starting July 9th, OAS payments will be adjusted in two ways. First, the usual inflation-linked increase, and second, a special cost of living relief top-up for low- and middle-income seniors. This is a direct response to rising prices, especially for essentials like food, rent, and prescriptions. Seniors aged 75 and over will see a reinforced 10% permanent increase that was first introduced in 2022. That bumps OAS for many over 75s to about $842 per month. Those aged 65 to 74 will also see a rise up to around $713 monthly, depending on residency and eligibility. It's important to remember that OAS isn't always automatic. If you haven't been auto-enrolled, you need to apply manually. Many miss out simply because they assumed it would start on its own. Don't let that happen. Check your My Service Canada account. Now, here's where it gets even more crucial. Guaranteed Income Supplement, or GIS. GIS supports low-income seniors who receive OAS and need extra help. And in July, it's being updated in several big ways. First, the income thresholds are being revised, which could mean more seniors will qualify for GIS or qualify for a larger monthly supplement. The maximum monthly GIS for a single senior is rising to around $1,018, up from about $965. For senior couples, each partner receiving GIS could see benefits rise to around $665 per month. But perhaps the biggest game changer is the new reassessment window. Starting this July, if your income has recently dropped, for example, if you retired last year or had to stop working for health or family reasons, you can now apply for GIS using your current estimated income rather than your 2-year-old tax return. This is a huge win for seniors who previously didn't qualify simply because their past income looked too high on paper. So what does this all mean when we step back? It means that for the first time in years, Canada's retirement system is undergoing real, responsive changes to reflect today's economic realities. From enhanced CPP for workers, to OAS increases targeted at older seniors, to expanded GIS eligibility and flexible reassessment rules. These are meaningful changes that could put more money in your pocket starting July 9th. For some retirees, this could mean hundreds or even thousands of extra dollars over the next year. Now let's make sure you're ready. First, log into your My Service Canada account and make sure all your information is current, especially your direct deposit details. If your banking info or address has changed recently, don't wait. That's the #1 cause of delayed payments. Second, ensure your 2024 tax return is filed accurate, and includes all relevant deductions, like the age amount, pension income splitting, or the disability tax credit if applicable. These can reduce your taxable income and potentially increase benefits. Third, if you or a loved one had a drop in income recently, apply for the GIS reassessment as soon as possible. You don't want to miss the window. And finally, check your mail and email regularly for any communication from Service Canada. Don't ignore those letters. They could include important details or deadlines for your benefits. Now let's touch on one question that's come up a lot lately. Will these changes increase your taxes? The answer depends. CPP and OAS are both considered taxable income. GIS is not. So yes, if your CPP or OAS benefits increase, your taxable income rises slightly, and that could affect your tax return in 2026. If you're unsure how this will impact you, it's a smart move to check in with a CRA community volunteer or financial advisor who specializes in senior benefits. They can help you keep more of what you've earned. And before we wrap up, one last thing. So many seniors miss out on additional help simply because they don't know it exists. From provincial rent assistance and utility rebates to the Canada Dental Benefit or free tax clinics, there are programs you might qualify for beyond CPP, OAS, and GIS. In the coming weeks, we'll cover those in detail so you can take advantage of every dollar you're entitled to. These smaller programs can add up, sometimes worth hundreds or even thousands per year. Make sure you don't leave anything on the table. Many seniors also wonder how these updates might impact their eligibility for other income-tested programs. For example, with increased CPP and OAS payments, some low-income seniors could see slight adjustments to benefits like the GST-HST credit or provincial drug plans. It's important to remember that while CPP and OAS increases are meant to help, they may also influence how much you receive from programs that use income as a qualifying factor. This is why regular income reviews and proactive planning are so important, especially for those living close to threshold lines. Another point worth noting is the growing conversation about automatic enrollment expansion. The federal government has been under pressure to improve automatic enrollment not only for OAS, but also for GIS. Right now, many seniors still miss out on GIS simply because they don't know they're eligible or they fail to apply in time. Advocacy groups are pushing for Service Canada to use tax data more effectively to proactively enroll eligible seniors, especially those in vulnerable or isolated communities. Whether this change will happen by 2026 remains to be seen, but it's something seniors should follow closely. Another important issue we're hearing from many viewers is about delays in payments and confusion over processing times. As these changes roll out in July 2025, it's possible that some seniors may experience delays, especially if their information is outdated or if Service Canada needs extra verification. If you haven't updated your direct deposit info recently or moved addresses, now is the perfect time to check that your file is accurate. Even small mistakes can cause your payment to be held up for weeks. Logging into your My Service Canada account can help catch any of these errors before they turn into problems. Also, we've been getting a lot of questions about survivor benefits and how these increases will apply. If you're receiving CPP survivor benefits, the upcoming changes could slightly raise your monthly amount, but it depends on your own contribution history and the deceased spouse's record. It's not a flat increase for everyone, so be sure to review your statements or contact Service Canada for an estimate tailored to your case. Another thing to keep in mind is the impact of inflation indexing going forward. Even though July brings an increase, these adjustments will continue to evolve each quarter based on the Consumer Price Index.